Hello, this is Jared with Tax Relief 101, the most passionate show about taxes on the internet. Well, at least YouTube. So here's the thing. This is the show that I put together. It's a little bit of a hobby of mine. I work in the tax industry, and I just noticed that there's a lot of bad information out there. So I put this together as a hobby in my home office. To be able to educate people better about some of this stuff. I get to talk to some interesting people. I get cool questions from you guys that I get to answer in videos like this. And I just get to have a little bit of fun with it. So that's the deal. You get access to all sorts of people, from specialized CPAs to, enrolled agents who are doing the work every day, to, specialist tax lawyers. I've got a bunch of colleagues all around the nation that I'm going to eventually interview. And you get all that for free. But the deal is, you get my home office. You get kind of a low production value because this is a hobby. But you get access to people that it would cost you hundreds, if not thousands of dollars to talk to for free. And they answer your questions. So if you like that, keep watching. If you don't, well, I don't know what to tell you. Find another show. But this is what that's kind of our thing today. So if you've got a question, put it down there. We'll answer it. I mentioned that a little bit before. The only other thing about this is just, I guess, now we're going to move on to the question for today, which is, does owing the IRS hurt my credit? And we're going to talk about that because I know a lot of people are worried about that. If I owe the IRS, am I going to have trouble getting a house? Am I going to have trouble getting a credit card? What exactly is going on there? And the answer to that, like a lot of these questions, is it's complicated. Sometimes it does, and sometimes it doesn't. When you owe the IRS, as soon as that assessment is made, and you might make that assessment when you file your taxes, there's something called a statutory lien. And that attaches to all your property and all your wages, is the way the law works. So as soon as you make that assessment, the IRS has the right, if you don't pay, to potentially claim your assets. And so that's what happens there. Now, if it's just the statutory lien, the ghost lien, nobody can see it. It doesn't hurt your credit. But as soon as the IRS files a NFTL, which is a notice of federal tax lien, and you'll get that in the mail, or at least you should if your address is current with the IRS. At that point, it goes on your credit report, and it's still, that attachment to your property is still there. It hasn't changed. But now the IRS has secured its position with all the other creditors who may file a similar lien. So basically, what happens is it gets filed with the county recorder usually, or some other equivalent entity, and that lien attaches to all your property, and depending on whoever gets in there first, they get kind of first dibs on your assets, unfortunately, is how it works. And so when the IRS puts that on there, other people then make credit decisions based on seeing that, whether or not they want to give you credit, and whether or not they want to do business with you, or whether or not they want to hire you. And so that's what really makes a difference there. The good news is that sometimes you can get a notice removed. Sometimes you can get that that visible lien removed if the IRS thinks it's in its best interest to have that lien removed. The thing I always remind people is that the IRS wants to get paid. They're like any other creditor. So if you can come up with a deal for them that basically says, removing this official lien from my record will allow me to pay you, there is a chance that you might get that removed. It's not 100%, but a good quality representative can really increase the odds of that. The last thing I want to do in this is give anybody the impression that, the same impression that people get from the commercials, which are for the most part over exaggerations, and the FTC has been after them for years. But a good quality representative can increase the chance of you being able to get that gone and get it out of your life. And usually that's with putting forth the right kind of case, and if the initial agent disagrees, knowing how to appeal that at higher and higher levels, and really making the case for the IRS that it's in their best interests. That's kind of what that does, and there's a lot of soft skills that go along with that. It's not as simple as, calling up the main hotline and going, you should take this lien off. That's not how it works. But that is a possibility. It's one of the more complex things you can do or can have to do. And that'll get that off. Then you'll be able to pay them. This happens if you want to be able to get an equity loan and take out equity of an asset. That's the kind of situation where this would come up. Sometimes it comes up where people might lose a license if the IRS puts that lien on there, or they might lose the ability to do business. That's really not a good thing for some professionals. And again, the IRS wants to be paid. IRS can't be paid if you're broke. So if they're going to make you broke or something, they're going to be more reasonable about whether they're going to do that or not, because they don't actually care about what other creditors know about you. That's not the point of the lien, is not to punish you. The point of the lien is to secure their place in the order of creditors, and so that they can get paid, not to officially give you a scarlet letter or anything like that. Not to kind of publicly shame you or mark you in any way. The point is just that to make sure they eventually get paid. So there's some stuff you can do around that that'll help fix your credit. And then there's also been a program recently where credit agencies are scrubbing some of those federal tax liens for a variety of reasons. And I'll do an episode specifically on that in the future, so you'll get a little bit of information and find out if you maybe your lien qualifies, because it might. But credit bureaus are not known for their verification of data accuracy, which is one of the reasons they're doing this. And so you might have to look at that and find out if it's potentially allowable for that it could be removed. And again, I'll go over some of the kind of preliminary details. That's all with that. We'll do that episode soon. But other than that, if you've got a comment, comment down below. I'd really like to know if you think, should tax debt hurt your credit? And should it hurt your credit before the IRS files that NFTL? Some people might have some different opinions about this. The other question is, this is kind of a broader question, but, should employers be able to see that and fire you for that, or not hire you for that? This is kind of a loaded subject. Honestly, it's really kind of stinks when somebody loses a license that would let them pay back a debt to the IRS, but they lose their license and they can't. The IRS doesn't get any money. They lose their job. It's just really not a great situation. And it's really unfortunate when it happens. But what do you think about that? Other than that, like I said, share, comment, leave us some questions. We'll answer them right away. This is Jared with Tax Relief 101, and I'm signing off. Have a great night, guys.